Good morning, everybody. Hey, welcome to Friday, October 22nd. Hope you've had a great week and looking forward to your weekend as we close out the week. Yesterday was, well, let's just say it was a little bit of a mixed bag, but, not bad at all. And we will talk about that and more when Dave joins us up next. But before we do, let me remind you how much risk plays a role in your portfolio. If you're getting close to retirement, our core retirement design helps you design the retirement you always dreamed of. And give us a call at 863-382-0037 to schedule your core retirement design. Hey, with that, we got Dave coming up next. Looking forward to our conversation today.
5.7 Island Flight FM. Good morning. How do buenos dias, y'all? We're at 8:41 now, 19 before 9. Time to check in and see what's going on with your money. We do that every morning at this time. You should have figured it out by now. We do have on the line Phillip Statler from Statler Financial Services, who I believe you told me you're operating from home while you get some new and advanced IRA information this weekend, don't you?
Yes, sir. That's correct. Yeah, yesterday was a big day talking about the Secure Act, which has been around for a little while, Dave, but just to remind people, man, if you inherited an IRA now or last year, the rules have totally changed, and you need to be aware of what those rule changes are when you inherited an IRA.
And, that was a question in my family when I lost my mother 20-odd years ago, and my heirs will have to address that as well. If you've got an IRA that's in an inheritance, it'd be a real good idea to get a hold of Phillip because he's got all the updated rules and information available, right?
Absolutely. Yep. And we got another full day today.
All righty. Well, we'll expect an even better Phillip Statler here on Monday then, all right?
All right, man.
I'm raising the bar for expectations here, brother. Setting the day up, it was a kind of herky-jerky day on Wall Street yesterday, but I think I'd be tempted to call it net flat on the blue chips. I mean, the Dow was off by 6 points. Standard & Poor's was up by 13.5, which is a measurable percentage increase. NASDAQ was up by 94. By and large, I'd call that something that looks like a semi-normal day, really.
Yeah, I mean, I don't think there's anything to complain about yesterday. I mean, the Dow was basically flat, like you said, and NASDAQ made some progress as well as the S&P 500. So, I mean, I think that all in all, it was an okay day yesterday. The question is, can we finish the week strong?
It would be kind of nice. I mean, we were bumping our nose on records yesterday morning, so I was kind of expecting a profit-taking day. It was a pleasant surprise to see, on balance, the indexes were up. Yesterday, midday, we had our big economic reports because this morning gives us almost nothing. It was a hit and a miss. One of the big ones that I was surprised to see and happy to see based upon the new home starts and the building permits that we'd had earlier was existing home sales. We are still selling homes at a surprising rate, aren't we?
Yeah, we are. Existing home sales were a pleasant surprise. I mean, they expected 6.1 million. It came in at almost 6.3 million. So that was a pretty nice little surprise there. And that's a lot better than it was in August, because August was 5.89 million. So good news there. We still see existing home sales moving and going up. So that's good news.
I at some point in time, I start wondering if everybody has already sold their home.
Well, they're still going up for sale in my neighborhood.
Yeah, mine too. It's amazing. I mean, the market is just hot as a pistol right now. The miss in the bunch, though, was on the leading economic indicators, which kind of sort of verifies something you and I have been waving as a caution flag for some time, doesn't it?
It does. It does. I mean, it does. I mean, we did increase the leading economic indicators. Were expected to increase by 0.4%. They didn't. They did about half that. They increased by about 0.2%. If you compare that to August, that's a pretty big slowdown. August, it was up 0.8%. So we're moving forward, but not near as fast as everybody had expected.
And that's kind of a narrative that we've been repeating over and over again. Seems to be the story now for a year and a half. Yeah, we're making progress, just not as fast as we'd hoped, right?
That's right. And I mean, I was looking, one of the things, articles that I'm seeing more and more of, Dave, is the stagflation articles, which those aren't comforting at all. We don't want to see us hit that stagflation period of time.
Not in the least, because the thing that's causing it this time is the phrase I was using yesterday. I mean, it sounds unsympathetic to those that are having hard times, and it's not meant to sound that way. But the long and short of it, in the stagflation situation we're into now, is too much money chasing too few goods because we can't stock the store shelves.
But that's right. It's a supply chain issue, and we're going to talk about that a lot today when it comes to the earnings reports, because we are seeing that being a big impetus in what they're looking at going forward in their earnings reports.
Absolutely, and we're going to get to that, especially a couple of the big hard goods companies that I read reports on. The only other thing in terms of news headline stuff that comes up, and it's primarily for the sake of putting reassurance into some folks' minds, at least for the short term, that big real estate trust in China that everybody was expecting to go belly up. Well, what a shock. Evergrand managed to make their bond payments, and they are still solvent. Who'd have ever thunk that in a command and control economy like China, that they'd managed to avoid a real estate crash? What a surprise, huh?
They didn't give any details of how they did that, did they?
No, and that's kind of why I've got my tongue in my cheek when I say what a surprise. The thing that I was reading, and this is while you were on vacation last month, that in China, we've got amateur investors that dump money into the stock market. In China, the family investment is in real estate. They buy extra homes, they buy rental properties, they do whatever down the line. So the Evergrand impending bankruptcy would be to China what a major stock crash would be for us. It would be the major consumer confidence hit of the century. So my hunch is that the government sees the writing on the wall, and they aren't going to let that happen.
No, they're going to be like us in 2008, right? They're just going to be pouring money into the system to make sure that doesn't happen.
Yeah, 2008, 2020, and 21 too, maybe, pouring money into the system.
Yeah, we are pouring money in, just a different way.
Yeah, that's true. So into earnings season, got a whole pile of stuff, and one of the tidbits I read, when we get to the futures, we're going to have NASDAQ kind of bucking an uptrend this morning, and they're going down, and at least one of my news items says the biggest cause of that singularly is Snap at the moment. What the heck's wrong with Snapchat all of a sudden?
Well, you would think, looking at the earnings report, it's not a bad deal, Dave. I mean, they did beat earnings by 9 cents a share, came in at 17 cents. Now, they did miss by just a little bit on the revenue side, but not by a long shot. But here's the fly in the ointment. I mentioned earlier, there's different things, and this one's not a supply chain issue, but it's an information issue, right? So they've come out and warned that they're going to see slowing growth due to the changes that Apple's made in their privacy rules. And so that's really hit Snap hard today, down like over 21% right now, Dave.
Ooh. Yeah, to explain it to folks that don't watch it, Apple changed their operating system where the social media programs like Facebook and Snapchat can't read where you've been with websites on other programs inside your phone, so consequently they can't target the ads as carefully, and they don't get as premium a rate out of their ads, and that's got Facebook in a major tizzy, and is giving Snapchat some thinking for the future, I gather.
It really does. And let's put some numbers behind that. It's easy to say, well, we're down 21%. Well, that 21% means that they've dropped from $75 to $59. That's over $15 a share that they're trading down right now.
That's a major dump. They're on the fringes of this big social media circle anyway, so a down day or a poor guidance report from Snap probably means more than Facebook putting out a conservative guidance estimate.
I'm betting so. I mean, I bet this is going to leak over to a lot of the social media avenues.
It may very well. We've got some other reports, and you'd alluded to hard goods issues. Give us some of the stories as to what's causing grief on the market this morning.
So I'm going to tell you that the Intel reported, and they're trading down this morning too after having a decent earnings report. I mean, they beat by like 60 cents a share. However, again, kind of like Snap, their sales were a little short of projections. Now, their information from their report was not so much supply chain issue. I think you could actually call it that, but they're telling people, look, expect lower profit margins over the next few years because of them continuing to invest in technology. If I'm not mistaken, I think Intel is actually building a new plant out in Arizona. They expect to be up and running, I think next year, if I'm not mistaken. But that's really putting some pressure on Intel today. They're down 9.8% this morning.
Wow. Yeah, that was a big item in the tech press a few months ago that they were going to bring some of their production on board to the United States to avoid some of those shipping issues we got with the Far East.
Yeah, that's right. And then, so then I was looking, okay, where else do we have some supply chain issues? And the next one I saw was VF Corporation. They're the ones that make North Face and other apparel brands.
Mm-hmm.
They missed all the way around the board. I mean, they missed top line, they missed bottom line, and they're seeing an accelerated demand for their goods and recovery, but again, it's been disruption after disruption from the supply chain is really hitting them. And so they're trading down a little over 6% this morning.
Yeah, they're toward the top of my big loser list. I mean, Snap has the title, but VF is right up there. How about Whirlpool? I hear they've got some issues too.
So Whirlpool came out. They do. They having issues with their supply issues. I mean, that was a big warning in their report. They did beat their estimates by about 50 cents, 56 cents a share. Again, sales fell short. So, just what I'm gathering from this is they're controlling their earnings, but they don't have enough product to sell. It seems to be the consensus I'm seeing here. And so Whirlpool is trading down about 3.8% this morning.
And that's not good news because they own half the major household brands that are out there these days in the appliance industry.
Yeah, they really do. My last loser, let's just get all the losers out of the way, right? There's a lot of losses today. Boston Beer, the brewer of Sam Adams up there in Boston, they actually had an unexpected loss for the quarter. Sales declined. Their hard seltzer brand didn't grow as fast as they expected it to. And so they're taking it on the chin this morning, down 3.3%.
Geez, can't buy a washing machine. You might as well drink beer. What's their problem?
Yeah, they're really getting close to their 52-week low right now.
That's hard.
Yeah.
Give me some good news. I need to smile this morning, and we're running out of time.
Let's see what I can find. Hey, let's look at the toy industry, because I would think that the toy industry would be hurting, right, with all the supply chain issues heading into the holidays. But Mattel came out and said, look, even though we've got supply chain disruptions, it's not going to prevent it from having a strong holiday season. They beat on both their top and bottom lines. They beat earnings by about 10 cents a share ahead of expectations. They're trading up 6.75% today, Dave.
You may have to pay $150 for a Barbie doll, but by gosh, you're going to find it, in other words.
That's right. You can find it. You may not be able to afford it, but you can find it.
Take a mortgage. Buy Ken, too.
The last one I have for you goes back to the financial services industry. We go back to American Express. American Express had a good quarter. Beat on earnings, came in at $2.27 a share compared to the $1.80 it was expected to earn. Revenue top forecast, a record card member spending quarter. So that was good news. People spending it on the credit card, and they're trading up today 2.7% right now, and a new 52-week high too.
Cool. Yeah, they're not a cheap stock. They're $181 a share.
Yeah, exactly.
It's up there. Resetting the table, up day on balance yesterday, 45 minutes before we opened this morning. We kind of drew the pictures. What do the numbers look like 45 minutes early?
So at this point, we do have still a mixed bag. We got the Dow up about a little over 0.1%. The S&P 500 is basically flat, and the NASDAQ is down about 0.25% right now. If we look at the commodity side, we got a lot of green ink over there. Silver's up 1.6%. It's not bad. It's up 24.56 an ounce right now, which is pretty good because it was trading down below 24 earlier. Gold, man, gold's made a big jump, Dave, up 1.4% this morning. It has bounced back over 1800 to 1806 an ounce right now. And then crude oil, of course, going the wrong direction for you and I, up about a little over 0.8% to $83.20 a barrel. And let's just mention this one too before we get off. Interest rates on the 10-year Treasury going up a little bit higher than what they were yesterday, trading right now at 1.67% yield.
Well, poop. 30 years well over 2.1 right now, which you don't like seeing either because that impacts mortgages.
Absolutely does.
Yeah, mixed bag in Asia when they closed at 6 a.m. this morning. Europe is generally up in the 0.5% range across the board halfway through their day. Phillip, let's get some retirement advice in for people that don't know what they're going to do when they retire. You can help them make sure they've got a handle on what they're going to live like. How do I find you on the phone?
Absolutely, Dave. Hey, they can give us a call, walk through our core retirement design so that they can design the retirement they always dreamed of. All they have to do is give us a call at 863-382-0037. Catch our website at statlerfinancial.com and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
You got that down pat. I'll see you on Monday, sir. I appreciate it.
All right, man. Have a great weekend.
You too. Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler from the pit.
Hey, folks, I want to thank you again for joining us this week, and I hope that you have a great weekend. Remember, let us help you design the retirement you always dreamed of with our core retirement design. Calculate your risks, organize your goals and objectives, review your risk and cost of your current portfolio, then establish your optimized risk match portfolio. That's our core retirement design. Give us a call, 863-382-0037. Have a great weekend. I look forward to speaking to you again on Monday. Bye now.